All right. So thanks for joining us today, guys. We're going to be looking and talking about all things EU de minimis changes, which is imminent, really, especially in the world of logistics. And today I've got Beth from Starlinks here, who I trust probably no one else in this industry more than when it comes to international ships to, I guess, explain a little bit more around the changes that are going to take place and what you really need to put together to ensure that you're compliant when it does come about. So thanks for joining us, Beth.
Thanks for having me. Always nice talking to you.
And yourself. I feel like you're my personal consultant when it comes to anything international shipping. To you when I've got questions. And
I'm grateful for that.
Yeah, there's been a lot of them this year, that's for sure.
Yeah.
And I'm sure more to come as well. So I mean, Beth, like, just get straight into it, right? So talk to me about this EU de minimis changes, right? Because I think for listeners that are running e-commerce and retail businesses at the moment, can you paint a picture of how significant this is? Because we talk about 6 billion parcels a year, from my understanding, that enter the EU under this old de minimis rules. So, yeah, in your view, is this the biggest structural change to cross-border e-commerce in a generation?
But it's an interesting question because actually the pace of change isn't slowing down, not just for the EU, but across multiple markets. Mm-hmm. So we're seeing major changes happening at the same time, but not necessarily in the same direction. Mm-hmm. So it's probably helpful to go back over what we've seen in the last year and what's coming that we know about. So in the last year, we've seen the US remove their de minimis threshold. Mm-hmm. We've seen handling fees introduced in Romania, Italy, and France. Mm-hmm. We've seen New Zealand announce their goods management levy from the 1st of April. And we have the impending EU changes coming from the 1st of July, which we're going to cover in more detail shortly. Uh-huh. And then separately to that, we've had Israel increase their de minimis threshold from $75 to $150, reducing it back down to $75 and then increasing it again to $130. So there's an awful lot happening, and obviously retailers are being expected to keep up with that pace of change.
Yeah, I think there's just so much uncertainty at the moment, isn't there? There's so much change and consistency, and actually trying to keep on top of that and that headache whilst trying to do other things as well. It's
run their businesses. Exactly. Yeah, absolutely.
Okay, so let's get into the numbers then, from an EU side of things. So, I mean, there's still retailers I'm talking to right now that aren't even aware of these changes that happen into the EU, because I think people are unclear on what it actually is. And there's so much noise in de minimis, and as you've rightly said, whether it's Israel or the US or New Zealand, like there's a lot of talk about de minimis, but actually where that sits from a country level. So in the EU, exactly how does that new tariff structure work then?
Okay, so let's get into the background and some of the detail. So on the 12th of December 2025, the European Commission published a press release announcing the withdrawal of the €150 de minimis threshold and the introduction of a temporary €3 customs duty for low-value consignments. Oh. That measure was subsequently formalised in a council regulation, which was EU 2026/382, catchy, which was published on the 18th of February 2026, which removes the threshold-based customs duty relief and introduces the transitional €3 duty until the permanent regime enters into force in or probably around July 2028, when duties will be charged from the first euro based on HS code, just as they are now for any goods above the €150 threshold. Mm-hmm. So from the 1st of July, a temporary €3 customs duty will apply to low-value consignments not exceeding €150, specifically targeting IELTS consignments using an H7 declaration and also postal consignments. Imports that are outside of IELTS and postal that use H1 declarations, regardless of the value, fall outside of this mechanism and remain subject to normal customs duties from the first euro. Now, legally, the €3 customs duty is defined as €3 per item. Mm-hmm. Practice, the technical implementation based on the press release and the draft implementation guidance allows items in a parcel sharing the same tariff classification at an HS code 6 level to be declared together on a single line of the customs declaration. So to give a practical example, if you have one blue dress and two yellow dresses, they can be declared on the same line if the HS code 6 digit is the same.
Okay.
So there would be one €3 customs duty due, even though there are 3 items in a parcel. If the HS code 6 digit is different for a blue dress and a yellow dress, the declaration would be over 2 lines and 2 lots of €3 customs duty would be applied.
Okay.
The devil is really in the detail
100%.
and how this gets implemented.
Yeah.
And it's also really important to remember that there is no change to the VAT threshold. For any goods below €150, VAT still applies from €0, and there are no planned changes to this from the 1st of July. So there's that coming, but there's then also another change coming potentially from the 1st of November with the introduction of an EU-wide handling fee.
Okay.
And that's often referred to as the €2 handling fee. However, the legislation has not yet been finalised, and the scope, charging mechanism, and possible reduced rates for e-commerce customs warehouses remain under discussion. So in theory, it will operate in the same way as the €3 customs duty for e-commerce shipments below €150, grouped at an HS code 6 level, but it isn't confirmed yet and the implementation detail isn't finalised. And then outside of that, as we discussed earlier, some countries have already introduced their own national handling fees in advance of the EU handling fee being introduced. This is completely separate to the €3 customs duty, remember, with Romania levying a charge regardless of the country of import, and both Italy and France levying charges, but only for parcels cleared in Italy and France.
Okay. But yeah, like if you don't have your data incorrect, and if you haven't mapped it correctly, you can fall down very, very, very quickly on this. Which is why having someone as a trusted partner tends to make sense, because they can take a lot of that work away from you. I think if anything, it's becoming more and more complex. There are more and more changes happening all the time. There are more revisions to things. And
that's only going to continue. The pace of change is not going to slow down. So, what's happening now in the EU, what's happened in the US, what's happening in New Zealand with the customs fees and the customs levy coming, that's only going to continue across multiple markets.
Yeah, I mean, if I go back to a conversation I think we had a couple of months ago with one of our customers, where they were paying on every single item level rather than a rolled up on the HS code, and how much that was costing them on a monthly basis. That was down to not understanding what they could do and how to do it from a technology point of view, but also from a customs clearance point of view.
And remaining compliant, which is absolutely critical.
Completely.
Yeah.
And actually you were able to help resolve that, and fantastically so, because it saved that customer a significant amount of outlay every month. So it sounds I mean, it's a scary place to be in e-com is probably what I would actually say. Like right now, from a logistical cross-border perspective, there's so much uncertainty. It's actually quite a scary place in a lot of ways. Okay. Well, in terms of the duty now and applying that to the first year on customs declaration needed on everything, how do you see fulfillment operations needing to change? So if I'm going to re-say that, because that felt very on script, how do you think, with all these changes that are happening with regards to the customs declarations in the EU, how do you think fulfillment operations are going to need to change? And specifically for using WMS like Helm or a different solution, what data and processes need to be in place by July to make sure that customs can be handled at scale rather than being put on slightly in a panic when it gets around to June or July, sorry.
So I think I get asked this question a lot, and I tend to give the same answer, but I tend to give the same answer for a reason. And I can't stress the importance of accurate data and data compliance enough. So if the data isn't right, even the best strategy will fall apart in execution. So there's a couple of key things. Ensure that your HS codes are accurate. as being able to group items within a parcel at an HS code 6 level will be important, as we saw with the example earlier. And understanding the difference between intrinsic value and customs value, so that the right values are being declared for parcels above and below €150, and understanding when shipping costs can sit outside of the declared value. So essentially reaching out to the partners and the carriers that you're working with and asking them for advice to ensure that your data is in the right shape, you have the right HS codes, that the HS codes are accurate, and you understand from a declaration perspective what you should be declaring to customs from either an intrinsic value or a customs value.
Okay, and who owns that data? So from my perspective, okay, so someone has to own that custom data at the end of the day for declaring it. Does that sit when the parcel's moving with the merchant, the 3PL if you're using a 3PL, the carrier?
It has to start with the retailer, Callum. It has to be the retailer's responsibility. Because the retailer is responsible ultimately for shipping and sending the goods. It is their data, so they have to be the owner of the data. It can't sit with you, and it certainly can't sit with the carrier. So the responsibility has to sit with the retailer, but working with partners in making sure that actually they're presenting data in the right way and that the data is accurate. But the responsibility has to sit with the retailer.
Okay. One of the questions we've got here is, so as duties and data requirements ramp up, what does a fit for purpose tech stack look like for cross-border fulfillment? Do you think there are any non-negotiable integrations between a WMS and OMS, tax engines? I mean, the tech stacks these days are quite overloaded in some respects. But what do you think a merchant or a 3PL needs in place to stay sane over the next few years and navigating that? I think you've rightly said that a lot of it is down to do with the relationships that you have with the carriers and how they're processing that information. But in terms of the tech stack alongside that, what do you think merchants need to put in place?
Yeah, so for me, it always comes back to the data. So ensuring that the data points and the cataloguing of those data points are accurate. And if this can't be managed in-house, working with partners that can help, especially when new SKUs are being added. So it has to be a continual review process, not just done as a one-off to deal with one single issue. So it has to be best practice, constantly reviewed, constantly updated. And also being wary of so-called silver bullet solutions around duty and tax exposure. If something sounds too easy, it usually means risk is being pushed back onto the retailer. And there are some providers that are promoting oversimplified approaches to valuation. And there's very limited circumstances where alternative valuation models are compliant. And getting those structures right requires specialist expertise, especially as what's compliant for one market might not be compliant for another, which is a really important point in understanding the nuances by market. Yeah,
I think that's one thing I've come across a lot, is that how you evaluate your goods when you're importing it to new countries. It's incredibly worrying how brands do that, and almost they spin that out from thin air in some cases when I've spoken to brands, and it's the liability on it is huge, so you have to get it correct, and I think it's important that you do your due diligence when doing so.
Exactly.
Yeah. Okay. I mean, coming on to an area that I find very, very interesting, especially from a ecom background that I've had, is this whole change in terms of DDP, right? And how de minimis is completely changing that conversation, because de minimis is coming to an end, or feels like it's coming to an end anyway, Beth. And I think that changes the conversation a lot between merchants and carriers, and also how we shift from DDP, how it's shown in the checkout, what it means, who carries the risk from a DDP perspective. What I'm actually interested in is in terms of DDP and how that models in tax and checkout. What is your opinions on that? Do you think the expected norm is to deliver DDP in checkout, or do you think that brands are still in a case where it's okay to charge DDU at the point of what's the word for it? Delivery. That's the one.
DDP is an interesting one, and actually there's been a lot of discussion this year, and I've done a lot of discussion around it, because for me, international shopping should feel as seamless as buying locally. And to your point about friction, removing areas of friction is critical. Surprise charges at the door damage trust, and it damages trust quickly. So asking customers to pay duties and taxes on delivery, often with inflated admin fees, leads to refused parcels. It leads to more "where is my order" inquiries. It leads to lower repeat purchases. And ultimately, that all leads to a higher cost to serve for retailers. And also, when those parcels come back as refused or undeliverable, there's often an environmental cost too, not only in getting them back, but especially if the stock can't be reused. So when retailers take responsibility for customs clearance and they handle duties, taxes and fees up front, delivery feels simple and more familiar to the customer. There's no surprises at the door, and the experience feels much closer to buying from a local brand. So when delivery feels straightforward, customers are more likely to complete checkout, come back again, trust the brand, and buy again.
Yeah, and I think you've seen that with a lot of what I class as the larger retailers are moving and adopting that model, right? People like ASOS, people like Gymshark, they're all adopting that DDP shipping now, and it is becoming the norm. How do you see these changes affecting shipping options and delivery promises? Because I guess that's one thing with consumers' expectations, especially around delivery. Are standard SLAs going to stretch while customs processes and the data flows catching up? Or do you think a new data-driven setup actually improves reliability once everyone's compliant?
But I think it's back to the point about accurate data. So if accurate data is being passed, then in theory, there should be no impact on delivery promises. But actually setting the right landed cost strategy is critical. So retailers have a deliberate choice to make. They need to decide whether they're funding the cost of tax and duty themselves through either reduced profits or including in the product price to protect conversion at checkout, or whether they're charging the customers separately for tax and duty at checkout and monitoring how that impacts conversion, or alternatively considering localizing fulfillment to change the economics. But it's really important to then understand the true operating costs involved of doing so. So for me, whatever route retailers take, transparency matters. Customers need to understand the total price of what they're buying, and if charges cannot be calculated up front, then they still need to be clearly signposted so there are no nasty surprises at the doorstep. So retailers really have to be clear on how they handle duties, taxes and delivery charges, because those decisions directly affect conversion, trust, customer experience, and ultimately repeat purchases.
Attention and loyalty, isn't it? At the end of the day, that's a huge part. I think it comes back to what you keep saying, which is data, right? It's all about get your data right, and then everything afterwards is much easier. But it's so much harder if you haven't got that data in place in the first place as such.
Yeah, exactly.
Exactly. A different story in a warehouse from our perspective, right? If you don't have your goods in process set up, so you receive those stock in, then you're always going to be on the backwards foot with everything else because you're not set up to fulfill in the most accurate way. And it falls all the way down to selecting that shipping service.
It does. And look here, there are, clearance, compliance, disappointed customers, costs, fines. There are all sorts of issues linked to it. So it's incredibly important to get it right.
If you could give one piece of advice to a merchant or 3PL listening to this who hasn't started preparing yet, what's the most important thing that you would say to set up in the next 30 days? And I feel like it's going to be data, Beth, but
yes, it is. It is. So look, there are 3 priorities, I think. And also, it's not all doom and gloom. Let's make no bones about it. International growth is still a huge opportunity. And we've seen that with the US. Actually, we've seen across our retailer base that volumes haven't deteriorated. So volumes have remained stable, and for a number of our retailers actually have grown. So we mustn't think it's all doom and gloom, but there is a fair bit of preparation. And so the retailers that succeed are the ones that tend to make deliberate choices up front rather than the ones that react once the problems have appeared. So you're right, it is data. So clean, accurate and compliant data underpins everything. So if the data isn't right, then as we've touched on before, the best strategy will fall apart in execution. And then landed cost strategy, that's really important. So retailers need to be clear on how they're going to handle duties, tax and delivery charges, because of the way those decisions directly affect conversion, trust, customer experience, and therefore repeat purchases. So how are they going to handle these additional charges? There's a decision to be made there. And then work with partners. So work with partners who can support the pace of change and help retailers adapt to the complexity. So the right partners will help retailers without constantly disrupting the customer experience. So it's absolutely critical that retailers are now reaching out and finding those trusted partners if they don't have them in play already.
Mm-hmm. And I imagine from your perspective is like July isn't that far away. So crack on basically.
Like absolutely crack on right now.
Yeah.
So there's a lot of modelling that needs to take place within businesses to ensure that they're making the right decision. And from our standpoint, just as we did with the US tariff changes, where we supported through the calculator, again, we'll have that available for our retailers to help them with some of their modelling. So we're here to support, as are others, I'm sure.
Yeah, no, Beth, look, thank you so much for that. I think you've gone into lots of things. I wasn't even aware about the lines and the HS codes for the EU de minimis. I think that's a really interesting piece, which you won't come across unless you really start digging into the detail a lot of the time.
No, that part is really, really important.
Yeah,
well, there's going to be lots of €3 paid where they potentially don't need to be paid. Yeah. So the devil is in the detail, as we always say.
Yeah, perfect. And Beth, I mean, finally, and thank you so much for spending time. Just give me a bit of an overview on Starlinks, because I appreciate I never actually asked you to give me an overview of Starlinks. And I assume that a lot of people know who you guys are, but just as a brief overview, what does Starlinks do? What do you do yourself?
As we're a cross-border. We're a cross-border logistics business. We go to over 200 countries. We're based in the UK. I'm currently in our Heathrow warehouse. Mm-hmm. So I'm the managing director. I started the business in 2022, and we've grown to a team of nearly 100 now. We're an award-winning cross-border carrier. We're renowned in the market for having the lowest where is my order, the lowest loss, and the lowest undeliverable rates of any carrier in the market. But I think, as well as our hugely detail-oriented services and the fact that we have the best customer services in the market that are also award-winning, we are known for, in times of disruption and market change, we're known for providing very factual and clear advice. So we don't trade in any misinformation or disinformation. So we work very clearly and very closely with our retailers on making sure that we are giving them absolutely accurate information of the changes as they are happening. And I think that can be demonstrated with all the work we did and are continuing to do on the US tariff changes. And now as we look forward to what may or may not happen with the tariff refunds. Mm-hmm. So if anybody does want to stay up to date with that, whether they are or aren't a customer of ours, then obviously please follow me on LinkedIn or the Starlinks Global page, or reach out if there are questions. We'll happily advise.
Amazing, thank you. Yeah, and I think it's nice. It's that steady hand, I guess, as you're navigating this world of e-commerce, especially in these changes of the logistics scene, how much it has changed over the past year, and how much it's going to change over the next 18 months as well.
And who knows? I mean, and that's the point. If nothing else, it keeps it interesting and it keeps us on our toes. So none
but you know,
yeah, none of us know what is to come. But I'm privileged to work with a team of the most passionate and experienced logistics professionals in the industry. So I'm lucky because I get to essentially be the spokesperson for them, but there are 100 incredibly talented and passionate individuals working alongside Starlinks Global, and making sure that we are keeping our retailers fully up to date with the changes.
Yeah, and I think that's one thing I would say about Starlinks in general, is that it's a fantastic team and everybody's happy to answer questions. And just if anyone has any concerns or just wants to understand a little bit more around what's happening in the EU, what's happening in the US, or anywhere else in the world really that they're planning.
Well, indeed, exactly. Or if anyone would like to talk about potential holiday destinations.
Yeah, exactly, right?
Anywhere in the
world. But it's great information. I think that's one of the things we really value here. The Despatch company is the factual element of it. We know that we can have customers talk to you, and we know that they're going to get the right advice, and then the advice that can actually help them as well as they carry on. Like navigating this ecosystem. So lovely. Well, look, thank you so much for your time. I think we're going to do a recorded or webinar at some point over the next couple of weeks as well, hopefully, where people can ask more questions and join into it. Next 4 to 6, I've been told, where we can look into it in more detail. And we have lots of questions, so I look forward to that as well. So thank you so much.
Yeah, that'd be great. So please send questions in, and then looking forward to doing that. Thank you, Callum.
Cheers. Thank you, Beth. All right.
Okay, nice to see you. Much appreciated. Take care.